Consistency in any relationship leads to intimacy. My friends, think about it. Each and every day as you chart these markets for 10 to 15 minutes, practice trading, being involved in the market for just a little bit of time every day. How do you become intimate with anything? It is by consistently being in relationship. And that is why we push every day. Spend some time in the market. You can't do it all on Sunday. This is not how you get to be intimate with anything in life, whether it is a spouse, a child, a job that you do. You don't learn the nuances if you're not there each and every day. And you particularly don't do it in the stock market. Let's jump into these charts this day where everything is down except gold, which is up a little bit. Let's first jump into the S&P 500. Now, we saw things head up yesterday. I'm looking at the half-day chart at the bottom of the screen. They popped up on Monday. We saw things pop up on Tuesday morning, then roll off in the afternoon, ending down. Now, as we look at this week, and again, it's hard to see, I'll blow it up a little bigger. We've got a doji here for the week that is forming so far. We have two-day down candles. This latest one finished drawing on Tuesday. And again, not super down, hasn't hit the low that we saw from the Thursday, Friday two-day candle that punched through the weekly trend line. But again, we do have a red down candle. We do have a red doji. We saw where things moved up in the morning are consistently staying below the weekly trend line. Doesn't mean it can't blast through it tomorrow, but there is some weight pushing things down. We see these red lines here on the volume. Red only means that it opened lower than the prior candle's close. So we've seen that consistently the last 2 days. And of course, going into the second week of that. And we're only at Tuesday, and we're about up to half the average volume. Is that not interesting? So we'll wait, we'll watch, we'll see. Down just a little bit for the day, but did pull back. Now our trade is in. Of course, we pulled the up trade on the Qs, which was a great up trade for us. We had that red spinning top, not a perfect one, not below that weekly trend line, but right on it. But this week, we do have a red down candle that's forming. Look at all the volume we already have. We're just into Tuesday, and we're well over 2/3 of the way up to average volume. Again, third red down candle. We did not hit the low during this latest candle. We have a green. That means so that it opened a little higher than the prior close, but again, is still a red down candle. We see that day and a half of up movement, then trailing off in the afternoon. Volume reducing the whole way. We're well below that weekly trend line. Not saying that things couldn't turn around in this market, take off and pop up again. I mean, we've seen it happen. We saw it happen back on the week beginning the 15th of April and the 22nd of April, where things leveled off, then moved over down, then took off again. So we'll wait, we'll watch and see just what happens. We just really don't know at this point. But again, the market's getting long in the tooth. There's a lot happening. We'll let the charts lead us. Let's move on to bonds. Pulling back a little bit for the day, 0.14%. We're not in bonds because there's nothing that has sent us a signal yet. Now, if this does turn into a red down candle this week, we had average volume last week. It could be the makings of a move over going down. So we'll keep our eye on bonds, keep our powder dry. Let's look at what's going on gold. Gold up for the day, 0.35%. Again, you can see where gold hit up. And in fact, this candle was right up to the ceiling, the purple ceiling line, and then pulled back some. The wick did pass through it last week on the weekly candle. This week we have, it's hard to even tell what that is. Okay, it's a doji of some kind. If you spread it out enough, you can make it into a green spinning top. But again, it's a pretty small move. We will keep an eye on it. Could be rolling off, heading down. If this is the interim high and this candle goes red by the end of the week, then of course we would look for potentially going short on gold. So we'll keep an eye on things. Remember too, if there's a systemic market crash, what happens with everything? Bitcoin, gold, all of it. All of it goes down. You might say, why? It seems like if stocks are crashing, wouldn't Bitcoin, even bonds, wouldn't gold go up? What happens usually? Everybody has margin calls. So they're selling everything to cover the margin calls, to deal with the short, the market going down. That happens initially, then things sort out. So again, we'll keep an eye on gold. Don't know, I mean, it could blast back up again, but it looks like it's slowing. Now, let's look at HODL. That is, of course, the Bitcoin ETF. Where is it? Pulling back. You can see down almost 4%, 3.95% for the day. It's been going up in stutters, up about 4 candles, slide sideways and down a little bit. 4 more candles, sideways and down. We'll see if it keeps popping up. Now, we do have a bit of a ceiling here on Bitcoin at about, what is that? That's 83.47. I guess we're around the 74 mark. So we'll just keep an eye on things and see where it is going. But Bitcoin did pull back for the day. But of course, I mean, we had our telltale jumping in sign, did we not? Popped up last week, and we're hopefully just going to see Bitcoin keep on building. But it is a pullback day. Doesn't mean it's done. That's where we are, folks. Always love to hear from you. CW@chartingwealth.com is where to write us. If you have questions, problems, concerns, we're always glad to hear from you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.